Hello traders, Gary Wagner here at just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is June 21st, 2019, and this is the daily report for gold and silver, our weekend review. What a week we have seen. No, let's say this. What a month we have seen. Since May 30th, when the market really started moving, it was back at around 1293. It has been running solidly for almost 3 weeks now, and we have closed above $1,400 for the first time in quite some time. The definition of a perfect storm is when various elements come together, and those elements combined create a scenario in which it increases the storm itself. And I can tell you this, we are having that type of a perfect storm in gold. We've got the Fed talking about cutting rates. We had Mario Draghi coming out today and repeating what has been said by politicians throughout the European Union, that they're going to make money cheap, and they're also going to implement a rate cut. You had the recent incident in Iran in which they shot down a U.S. drone, and what response comes of that? Well, that we do not know yet. And then there's a little thing called the Chinese and United States trade war. These things combined have definitely propped up gold, and to give you an idea of that, let's take a look at current pricing. Traders, as you can see, gold did quite well today after trading to a high of $1,415.40. It has closed up $6.10, and it is trading at 1402.90, 1403. Of course, we are long. We will talk about that along with our stop and our exit strategy when we pull up some technical studies. Platinum also trading higher, about 0.5% also. When we look at it, it's back over 800 at 809. Palladium, in terms of the move, was actually almost a full percent, and it is almost at $1,500, $1,495.20. Silver did decline today, losing about a full percent at 1533, and all of that upside action that we saw in gold, platinum, and palladium were really aided by some strong tailwinds of a weak U.S. dollar. Take a look at the dollar. It has been falling solidly for the last 3 days, now below 96 at 95.67. Traders, let's take a look at some charts. Traders, take a look at this weekly candlestick chart. It is clear to see what a tremendous move we witnessed this week in gold, because it opened below 1340 and actually closed above $1,400 per ounce. That is a $60 move. And traders, although last week we saw a higher high and a higher low than the previous week, we can see that the relationship between the open and the close, the small green box, was very, very narrow. And what that, of course, tells me is that it was climbing for new highs but could not sustain them. But what is most impressive when we look at this market is that for a consecutive number of weeks now, we can say that 1, 2, 3, 4 weeks in a row have all contained higher highs, and they have all contained higher lows, and we have closed at a record high as well as a new record close in terms of gold futures, back above $1,400. The next thing we want to do is really take a look at the strength of the trend, and to do that, we'll move to a Henkin Ashi chart. And traders, because a Japanese average chart by nature is a lagging indicator, because it's using an average, we definitely want to use a daily chart rather than a weekly chart, and that's exactly what we're looking at right now. When we decompress it so we can see recent action in the market, what we're seeing is that this market has really taken off over the last couple of days. Tremendous body size, absence of lower wicks. Prior to that, although we had a succession of green candles, they did contain lower wicks, and there were small bodies, which told us that at that point we saw that bullish trend beginning to weaken. Of course, that came after a very, very slight correction that occurred back mid-June, June 8th or 9th, and that came off of this strong rally which really began at the end of May, and you can see solid body size, absence of wicks. So what that tells me is that we still have strength in the market. However, when we look at our Elliott wave count as well as a Fibonacci extension, it has come to the marks that these particular studies have forecast. So let's go ahead back to a candlestick chart to take a look at that. And traders, I have put up a daily candlestick chart. This has a Fibonacci extension as well as a rough Elliott wave count. Now, it's a modified extension in that if you look at the points that I am really placing for the start, which is this level here back in November at about 1180, up to this peak here, which of course was the former high in the market of about 1350 prior to coming into this rally here. And then we have some effective levels we want to look at. The first level is the 0.618 extension, and if we look at that, what I find is interesting is we can see that for a while it definitely acted somewhat as resistance, and then most importantly, when the market did go through it, it went through it like a vengeance. And you can see that with this candle that occurred yesterday as well as this one today. Now, a one-to-one relationship between this move here from here to here, if we begin down at these series of bottoms, a one-to-one relationship takes us to about 1420. High today, 1470. We're rather close. Also, when we look at the Elliott wave count, I am using a longer wave set of 300 candles. I'm also using the original formula that accounts for a larger move. You can see that we're getting a 5, and a 5. And so that tells us that we could in fact be running into some resistance here. Now, what should we do about that? First of all, we got in at $12.93 and then got out of $1,338. That's where we took our first profit. Let's get an arrow up there. So we took our first profit roughly here, roughly 45%. We got out at 38, and lo and behold, we then got in at 39 a couple of days later, I believe on the 12th, which would have been right about here. We've seen a substantial move to the upside. Our stops are sitting below 72, where they're at 1371.13. What I based it upon was a midway point here, and the next spot that I would look to move that up to is below the low today, and the low that came in today was 1386. We'll want to see how it reacts as it opens overseas on Sunday, but my sense is if the market continues to move up and we have a little bit more headway, we want to trail our stop up another $15 or so to account for this low here. Right now, it is sitting at 1371, and we are in at 1339. So we have locked in a good amount of profit on this trade. We had good profit on last trades, and that is the kind of work that we like to see gold perform for us. In other words, we're trend traders. And when this market runs and it is bullish, we have the ability to capture a decent percentage of that move. And we have done just that. This has been Gary Wagner, wishing you as always good trading. I'm so happy we were able to deliver that to you this week. Have a great weekend. We'll talk to you on Monday for the next daily update and review. Bye-bye.